What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the entire market, of course. And we did see a massive intraday reversal in the S&P, the NASDAQ, and of course the Dow. And a lot of individual stocks, including semiconductors and chip stocks, that absolutely got reversed intraday. And we did see a lot of momentum. We were pushing higher, of course. We were very, very green, only for the rug pull to happen and of course for the markets to slide back down. And not only down, we actually ended up red on the day in the tune of well over 1% on the S&P, down over 65 basis points. NASDAQ was down a little bit over 1% on the day. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like, and of course don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all trade alerts and trade ideas and options alerts, and everything's going to be included, as well as the moneyvest.com website that's going to be coming online here very, very soon. And also do connect with me on Instagram. My handle is going to be CASWRP. Now, we did get the unemployment numbers today. So this right here was a state of the market. So S&P here down 65 basis points, NASDAQ dropping over 1%, the Dow Jones here over 18 basis points lower. And this right here was the employment situation. So unemployment numbers coming in very strongly at 275,000 jobs, and unemployment rate ticked higher. So from 3.7 to 3.9%. 20 basis point increase. Private payrolls up 223,000. Manufacturing payrolls were down 4,000. So that is one of the most important leading indicators for a potential recession, because if manufacturing, productivity, all those parts of the economy start losing jobs and start coming down, that is a sign of a decelerating economy moving forward. And we did see, again, average hourly earnings month over month, 0.1% increase, 4.3% on a year-over-year basis. And then average work week sitting at just over 34.3 hours per week. Now, this right here was the entire market. Now, before we dive further into this, I want to quickly break down the idea with respect to the unemployment numbers that came out very strong. So we had 275,000 jobs printed in the month of February, yet the unemployment rate pushed higher. And yet the markets were green on that news and then sold right back down. So we're going to break down all that and why that happened. Why was there a rug pull in the markets here? Now, there could be a couple different reasons, but I don't want to get into too much detail. I want to give you the bigger picture, the more macro overview of what actually transpired from every single event that happened. So first of all, we get a very strong jobs print. 275,000 jobs. It's an insane number, right? So that on a February month-over-month basis, incredible increase. We did see an uptick from January over to February, and then 275,000 coming in well above consensus expectations of 190,000. I broke all of this down in one of my other videos where I talk about unemployment, and we talk about this in more detail. I kind of go over the spreadsheet and the ratio of job openings versus unemployed persons, which is now sitting at its highest level since January of 2022. At over 6.45 million, and the ratio of job openings to unemployed persons is now sitting at 1.37. So it's normalized a little bit. It's come down from highs of 2.5. So now there's 1.37 job openings for every one person that's unemployed. And the Federal Reserve wants more softening in this number, and for this to come to equilibrium at close to 1. That's exactly what the Federal Reserve wants to see. So unemployment rate pushes up from 3.7 to 3.9%. And the reason for that is because the unemployed persons increased to its highest level since January of 22 to 6.45 million. And as a percentage of the total participating population, that ratio, that number is at 3.9%. So that's the correct unemployment rate that we like to look at. So that's number one, right? So unemployment rate going higher, that should actually be good news for the market, which is bad news for the economy, because if unemployment is going higher, that means more and more people are out of jobs. That, of course, is early signs of a potential recession. And that right there exactly is what my concern is from an economic standpoint. While the market may see that as good news, and the markets did rally on this, because that is only going to reaccelerate that debate and kind of increase the probability for the Federal Reserve to maybe start cutting interest rates once again and kind of increase those probabilities. And they've already jumped from 3 to 4 rate cuts in 2024. What that also does is increases the probability of a potential recession, right? So for the longest time, again, there's been this debate whether we're going to get a soft landing, a no landing, a hard landing. And in all of this sort of noise, the data will tell us, right? The data and the numbers will eventually tell us what is going to happen. And for that very reason, unemployment pushing higher is the early signs of a softening labor market and a potential recession and economic slowdown. So if we consider recession, let's say that's going to happen in 2024, what tends to happen is the markets obviously drop and then they recover on quantitative easing. So it's very much possible that we get into an environment, we get into a situation where there's a couple things that I want to break down because there's a lot of variables, a lot of things that are going on in my mind. Number one is that let's say that we get a recession, right? And we see the inflation numbers coming down, trending lower. But in a recession, earnings also do get a hit, right? So earnings also do get a hit to some extent because recession means high levels of unemployment. That means people are not making money. They're not actually generating any income. And as a result, they're not going to be spending as much money. So earnings take a hit for these companies. So there's going to be a couple quarters, let's say, that earnings do drop and we are in a recessionary environment and the markets kind of drop here on that recession expectations. And then, of course, the Federal Reserve jumps in and cuts interest rates because we're doing quantitative easing to help kind of support the economy. And that's only when inflation is back down to 2%. That's only if core inflation is back down to the Fed's target of 2%. If that does not happen, then that is the worst place the Federal Reserve can be. Okay, that is the worst place the Federal Reserve, the economy, the markets can be if we have high levels of inflation, we have high levels of unemployment. That is quite literally the opposite of the dual mandate. The dual mandate from the Federal Reserve dictates, and that is a policy that they've set, monetary policy, that they want stable prices and they want low levels of unemployment, right? So I mean, they want a very tight jobs market. They want more people employed, more people flourishing, making more money, and they also want prices to be stable. But if we get into a recessionary environment, and if we get into an environment where there's also stagflation at the same time, that is the last place the Federal Reserve wants to be in. So the ideal scenario and what the Federal Reserve is really hoping for, what Powell and everybody else at the FOMC is hoping for, is that even if you do see some softening in the labor market, even if you do see unemployment go up as it did today from the previous numbers, inflation is going to be back down to their 2% target or lower by the time a recession actually comes here. By the time recession happens, inflation's already down so that they can finally start quantitative easing to help support the economy and get us out of this recession. Now, one more thing I will point out too is that there's very much a possibility that the Federal Reserve does not cut interest rates all the way down to 0% as it did the last time if we see a recession. Maybe they do staircases up and then staircases down. They don't do elevators down. You know that saying, right? Staircases up, elevators down. Maybe they do staircases up and then staircases down. And they do them slowly and steadily, these rate cuts of 25 basis points to make sure that inflation doesn't reaccelerate, because that's the last thing they want is also inflation accelerating back higher and kind of, throw water on all the progress they've already made. So that's another thing. But of course, if you do get into a recessionary environment where unemployment is high, then they're going to have to basically choose between fighting the recession and helping the economy, or fighting higher prices and controlling inflation. And ideally, they would want to be in a situation where even if there is a recession, inflation is back down so that they can actually start quantitative easing in a very stable and steady fashion. So that's where we are. There's, again, a lot of probabilities and a lot of potential outcomes with respect to the economy and the markets here. But the biggest sort of challenge here on the day was the intraday sell-off, and this was nothing short of clear profit taking, in my opinion. Nvidia down over 5.5%, Broadcom, AMD, Intel. I mean, AMD saw a 7 to 8% reversal on the day. Amazon and Tesla also dropping. Meta was down. Costco 7.6% sell-off. Eli Lilly, of course, selling off over 2.3. Microsoft was lower. Apple and Google were the only two companies that were somewhat pushing higher. And they're also very, very oversold. So rightly so that they are oversold. They've got potential opportunities. So these are two companies that I would consider from a trade idea standpoint on the long side in the coming weeks here, considering how oversold these two stocks are. So real estate pushing up. We got financials, comm services, utilities all pushing higher, with technology selling off a little bit over 1.7%. Utilities, materials, real estate, financial, consumer defensive, industrials, all of them pushing higher, with cyclicals, services, and technology selling off in the last 1 month. Again, most sectors are green, with comm services pulling back here. Volatility was higher. Soybean, wheat, gold, oats, canola, lumber prices, everything pushing higher, with heating oil, orange juice, coffee prices, and cotton pulling back here. And we got Bitcoin just a little bit over 68,000 and Ether just over 3,900, under $100,000 as well. So massive moves in a lot of these stocks here. So intraday, you can see the SMH ETF was down a little bit over almost 6%. I did trim a little bit of SMH to lock in over 45% profit. So again, if you want to get access to all the trade alerts and trade ideas and options alerts, link's going to be down below. And one of the biggest concerns with people that I want to address is that, Caddy, you don't send out a lot of alerts. Caddy, you don't trade that often. Folks, I'm here to tell you, after 10 years of investing and trading in the markets, and let me tell you, most mature and experienced and successful investors and traders will tell you this: trade less. Trade less. Less is more when it comes to investing, because your decision making needs to be at its highest optimal level. And the only way you do that is if you focus on higher quality trade setups, higher quality ideas. You trade less and you profit more. Remember that. Trade less, you'll profit more. The more you trade, the more constantly you're churning over your trades, the less profitable you'll be. Okay? Unless, of course, you've built a super crazy algorithm that's trading for you on a constant basis. It's kind of making money on very, very small spreads. Not talking about that. As human beings, the more decisions we make, the quality of our decisions continues to deteriorate. So what I've learned over the years, and what I would recommend and encourage everyone, is to trade less, make fewer decisions, but make higher quality decisions. And that's what I mentioned a couple people, and that was kind of like the theme of 2024, is to do less, but to do what's actually essential. Trade less and profit more. And so far, it's worked out perfectly. Yes, Tesla is one of those positions that is still down year to date, but everything else, SMH, cybersecurity ETF, Vanguard, lots of options trades, a lot of them have been super profitable. And again, ask a lot of people in our community, especially ones that are experienced, they will tell you to trade less, focus on high quality setups. There's plenty of opportunities in the market, so you don't have to capture all of them, but focus on higher quality setups and trade less, and you will profit more. So when it comes to, again, this is the entire semiconductor watch list here. You'll notice the amount of red we witnessed here on the day. So all of them basically selling off. Broadcom down 7%, Nvidia down 5.5%, ASML over 5%, on semi, Intel, SMH, Lam Research, AMAT, we got Qualcomm, TSM. So all of them down anywhere between 3, 4, 5, 6, 7%. I will be doing a more aggregate, more collective video on semiconductors here very soon. But we got Bitcoin here just a little bit over 68,000, so still doing really well. Ether pushing up to almost $4,000, so Ether also doing incredibly well. In fact, IBIT, so that's one of the ETFs that I started buying. I'm up a little bit over 35% on this as well. It's done incredibly well, 63% since $23, $24 per share back in February. But this is another trade idea. This is another stock that I picked up more recently and done really, really well on this. And of course, IWM, that was another trade that I took that I'm up a little bit over 6-7% on. So again, link's going to be down below if you want to get higher quality trade ideas and setups. Again, we're not going to be looking at insane 100 different opportunities, but I'll simply be giving you the highest quality opportunities, as well as in the newsletter there is going to be listed out some other trade ideas and options alerts as well. So when it comes to volatility, continues to kind of stay flat, consolidating sideways and 14, 15 levels. So this right here is going to be that level to keep in mind. Of course, inside this red rectangle, also another 11 to 12 consolidation here, and all the way up to this green rectangle between 18 and 20.5 for volatility. So those right there are going to be some levels to also keep in mind for the VIX. Now coming over to crude oil, seeing a little bit of a pullback, so down about 2%, getting rejected, from that resistance of about 79, close to $80 per barrel. And the next support, of course, is going to be $73, $74 a barrel for crude oil. Now, talking a little bit about S&P 500 first, we did see a bit of a pullback here on the day, down about 65 basis points. So this, again, has been part of this sort of uptrend, higher highs and higher lows. There's been constant dips here that we've seen over the months and over the weeks here for S&P. Support level is going to stay put at 5,045 all the way down to 4,800. So those are very, very important levels to watch, because once the trend basically shifts and changes, it will be hot and heavy. It will be pretty violent and aggressive. And of course, we got the NASDAQ here getting rejected at this resistance at 16,300. Support level is going to be inside this green rectangle between 15.1 and 15.4 for the NASDAQ. So that right there, previous support, is going to start acting as a new support for the NASDAQ once again. Talking a little bit about Apple here. So Apple, again, very, very oversold. I will be doing a more specific dedicated analysis on the entire trade idea on Apple for members only, for the Patreon members. And of course, it's also going to be a part of the newsletter. that we're going to share, and support level is going to stay put at 165 with a resistance and targets up to $180 per share for Apple, with a very, very oversold MACD and RSI at the moment as well. Talking about Amazon, and Amazon here also getting a little bit of that resistance and rejection at close to 175, 176. So that is going to be that level to keep in mind, and support level is going to stay put at 155 for Amazon, with a little bit of a gap to fill for Amazon as well. Tesla continues to struggle, down about 1.85%, so back down to 175. Support level is going to stay put at $174 per share for Tesla. Resistance is going to stay put at close to 199, close to $200 per share for Tesla. And support level, like I said, it's going to stay put at 175 down to as low as 150s. That's also going to be in line with the intrinsic value, very much in this downtrending channel of lower highs and lower lows as well. Talking about PayPal here, and PayPal on the day just consolidating sideways up over 87 basis points. So support level is going to stay put at $57.50 per share for PayPal. And again, lots of consolidation, also trading within the context of this downtrend of lower highs and lower lows. So very much in this downtrend here, lower highs and lower lows, and support level is going to stay put at $57 all the way down to $50 per share. For PayPal, still need some time to get that going, get that momentum going. And Visa here, support level at close to $280. That's exactly where it's trading at the moment. So even on the 30-minute time frame, you'll notice that we have just been somewhat validating this previous resistance here. And right now, we're just kind of back and forth from that support. But we are in and around that 275 to 285 range for Visa at the moment. Talking about NVIDIA had a pretty decent reversal intraday, so definitely some profit taking from highs of well over $970. So NVIDIA here dropped over 10% intraday, with the RSI MACD also pointing downwards. So just be super careful. This is only the preview. This is only a trailer, folks. This is only the trailer of what happens when a stock goes parabolic like this. And take a look at the weekly time frame. A little bit of that inverted hammer candle. Doesn't look good for the coming weeks here for NVIDIA, but we'll find out, of course, eventually what happens. Advanced Micro Devices, almost exactly the same pattern, selling off intraday from highs of well over 227, 9.5, almost 10% intraday reversal and a drop. A little bit of that inverted hammer candle, so just got to be super careful here. And support level is going to stay put down to 182, down to 160s, down to $130 for Advanced Micro Devices. Talking about Meta platforms, and Meta here also consolidating sideways. I did a video on Meta earlier today, so definitely do check that out here. And of course, support level is going to stay put at 487 down to 451 for Meta moving forward. Netflix, on the other hand, just also pushing down a little bit on the week, also down over 2.3%. Resistance and target's going to be up to 697 right now. There's going to be one more resistance intraday, like over the next few weeks to watch. It's going to be closer to 624. And support level is going to be very nicely put at 560 to 571 for Netflix. Talking about Google. And Google here also pushing higher after being very oversold. But intraday, of course, it's sold right back down. A big target and resistance sitting roughly at 140 to 144. So those right there are going to be some levels to watch for Google. And support level is going to stay put at 126 for Google as well. So lots of consolidation sideways. Very nicely higher highs and higher lows in an uptrend. Of course, selling off from those highs down about 15, 16%. Very, very oversold. And resistance is going to stay put inside this red rectangle right now at closer to 140 to 144. Support level at 126. This will be part of our members-only private video for the trade idea that we're going to be going over. And then finally, of course, we got Microsoft and Enphase and Costco, and Microsoft here consolidating sideways in that range. 420 resistance, 397 support. That's really where we are in terms of this consolidation. And then finally, we got Enphase closing in at just over $130. So my call actually did expire in the money, and the shares will get called away. But that's also fine because I did receive over $3 in premium. So I was able to lock in about another $3 on top of this. So 133 really was my sale price for Enphase, and resistance going to stay put at close to 138 with a support level inside this green rectangle, all the way down to $92, $93 per share for Enphase, of course. So lots of consolidation sideways in that range. Costco here selling off finally after insane amount of momentum here to the upside. So dropping over 7.6%, just a massive red candle coming in because of the valuation, I believe. Valuation was almost always way too high for Costco. And 675 to as low as 644 are going to be some next levels of support to watch for Costco. So hope you all enjoyed this video and a complete update on the markets here. Let me know your thoughts down in the comment section below. Unemployment numbers coming in super strong, but of course, weakness in the unemployment rate pushing up to 3.9%. So lots of different probabilities and lots of different outcomes here potentially in the markets and the economy here. So make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. 16% annual discount that's available until the end of this month. And as always, happy investing. I'll see you all in the next video.